Oxford Technology was founded in 1983 by Lucius Carey. When he founded it, there were no things as sophisticated investors or high net worth individuals. That was a rule that was brought in to enable what he was doing. And since then, we've invested in over 200 startups. We've learnt along the way what not to do and some of what we should do. And in our current portfolio, we have 51 companies. They're all companies that we invested in from startup. So they had no assets. They usually had ideas, often ideas that came from some of our fantastic universities, but also from people who'd worked in other spin-outs and had figured out what the real problems were that needed solving. We've been in and around Oxford since 1983. When Lucius raised his first fund, he went to Oxford University and said, I'd like to invest in some ideas coming out of here. And they said, we don't do that. We only do research and we do teaching. They have now changed their view on this, and they do quite a lot of spin-outs and quite a lot of innovation, which is good, because that's what's needed to help the world progress. So it's excellent news. Anyway, unfortunately, Lucius isn't here. He's got great stories, lots of experience, but come and talk to me at stand M24. It says M23 in my slides, but we've been moved one, so we're on M24 downstairs, and I can tell you some of Lucius's stories. So the thing that I'm here to talk to you about today is our SEIS and EIS startup fund. So we invest in 5 or 6 new companies a year. Let's say from the start, they may have a prototype that does something amazing, or they may have an idea that is wonderful, and we choose things where we're happy that there is the opportunity of returning over 100x on any particular investment. If not, it's not worth starting. And it's not that we expect to get 100x on every investment, because that would be counter to experience. But we know that if you don't start there, it's just really difficult with new companies. So there's got to be a really pressing reason to do that. So we take investors' money. We take a minimum of 15,000 to make it worth the effort and the admin which is involved, because there are quite a lot of forms you need to keep track of when you're asking the tax man to send you money back. It's quite nice when he does, though. And we invest first under SEIS, where you'll be getting 50% back from the tax man, and then in EIS in the following 2 years, where you'll be getting 30% back from the tax man. And the reason we do that, and don't just do SEIS as some funds do, is that we have learned that if, as a main investor, you're not prepared to follow on in the following rounds, other investors will not trust what the company says and will stay away. So rather than helping the company, you will actually be harming them. That's why we take your money and spend it over a 3-year period. It means your tax comes back slightly later. We're sorry about that, but we're not, because it leads to better results. Most of the companies, not absolutely all of them, most of them are within an hour's driving from Oxford or in London, where we have lots of things to do. And the reason we do that is we get really deeply involved with the companies, whether it's helping them find their first customer, whether it's helping them develop a piece of technology that they were unaware of but works with theirs. We're in there, we're up to our elbows, we love doing it, and you can't do that if they're around the other side of the world. Although Zoom has changed that a bit, it still helps to be able to get your hands on a prototype. And we have an office in China and one in Silicon Valley, where when our companies need it, we have people who can help them get contacts and progress some of the discussions. The tax reliefs I mentioned, you get 50% for SEIS, 30% for EIS. You don't pay capital gains, and we aim to make big capital gains, so that's a lot of tax you're not paying there. The shares become inheritance tax exempt after 2 years that you have them. So if you want to leave your children something they can't immediately spend, because these are illiquid investments, you don't get money back quickly, but while they're in the shares, they're outside of the inheritance tax. If one of the investments were to go poorly, you can write that off your income tax statement the following year. So the amount of money that's at actual risk is roughly 40%, all things taken into account. I said, and if you want to know more about the tax breaks, you can come and ask us on stand 24, M24. So here's a list of all our companies. I expect you to memorize it. I'll be asking questions in a moment. It's just to give you an idea of the spread, and also to give you an idea that some of them do really well and some of them not yet. Out of that portfolio, there are, and I shall hasten to point them out because it's important that you understand this, there are here, this one didn't work out, that one didn't work out, and that one didn't work out so far, and we expect a few more not to make it. On the other hand, that's how much it cost us for that company to fail. And this one's doing rather well, rather a lot more. And that's where the secret is. The tax man has designed a scheme to protect you against the stuff that goes well and let you keep what goes, protect you against what goes badly. And let you keep what goes well. If you do it the other way around, it's really bad. You don't want to do that. Anyway, the reality is the interest in this is not about the overall stuff. I mean, it is pretty good now. We're closing in on 3 times the value that was invested. Again, I hasten to indicate that this is what we've returned. That little red stripe is what we've returned to investors as cash. But the point is, these companies are still growing. This Refine here, which is up there, that 3 million, we are going to sell roughly 1 million of that in the next few months. But we expect that remaining 2 million to become 10 million in the space of a couple of years. We have pretty good reason to believe that. But in the meantime, we will take 1 million off the table and return it to our investors. Right, so here are some examples. This was the very first company we invested in our fund, Run3D. It was developed. We invested 125 at 15p a share, and it was developed by a lady who had a first from Oxford in bioengineering, and then went on to a PhD and ran for Wales and all this kind of stuff. Quite high performing. It captures the motion of runners. 50% of runners get injured, and this enables a physiotherapist or a podiatrist to identify why a person is injured or is likely to get injured, and be really specific about what you need to do to get over it. Anyway, took a little while to get the business model right, to get sales right. We had 5 clinics quite quickly. We're now adding 5 clinics a quarter. The share price at which we value it hasn't changed because we haven't had an investment since very early on. But this is growing very, very nicely. If you join our fund, I'm afraid you wouldn't get a share of this because you only get a share of new investments. That's how SEIS and EIS works. We can't share the pot. So you just have to look at what we're doing, decide you like it, and then we'll be investing in new stuff that will do very well for you. They're now in China. The States just opened the second clinic recently, and it's going very well. Etcembly, this is one of the ones that Bellevue's companies, or maybe one of the big ones, will pick up. See, the great thing about the COVID is, apart from giving me a chance to speak for 20 minutes rather than just having to share it with Lucius, is that a lot of people have now heard of T cells. And T cells are a key part of the immune system. They've become very interesting for people in cancer. And what this company has done is develop the computing power and have collected data which enables them to design T cell receptors, which are the bits that bind onto the cells that matter, completely in a computer. And it's the first company in the world to do it, which is why their share price, they're now raising money at 20 million valuation. We invested at £675,000 valuation. We're quite happy with how Etcembly is doing, and our investors will, at some point, hopefully, if someone buys it, because they may not, they will return very nicely for them. So it's going very well. They've got customers of the size of company that Bellevue's invested in, not the Pfizer's yet, who are paying them to use their technology to analyze data from their trials and design new TCRs. They started out as just 2 people across. They happened to be in the same building as we were located. We met them, we made an investment quickly, and now they're moving into a much bigger location. They're now employing 12 people, and it's going very nicely. Lightpoint Medical, this was one of our early ones. Chap had a very successful career already. He worked in Novartis, very senior job, and then his mother-in-law, who he liked very much, is a very nice mother-in-law, had breast cancer. They did an operation to check that she was okay, and she was, but in doing so had to remove some lymph nodes. And that meant that her arm was then basically swollen and would need treatment for the rest of life. He said, that's not good. I need to find a solution for this. And so David took, as he's called, set out and developed a technology which would enable surgeons to know whether something needed to be removed before removing it. So rather than take it out and then go to the pathologist. And that's really important for breast cancer. It's even more important than some other cancers where there are a lot of lymph nodes around the places where the cancers are, and removing them is a major, major operation and has lots and lots of problems. It's not only the lymph nodes, no, it's also being able to find the cancer itself, because we can now detect cancer when it's very small. But that means that when you're going in as a surgeon, you have to find that very small thing, and it's not on the surface, and it hasn't got a big arrow pointing at it. So what we've developed is a machine that effectively gives a big pointer when you've found it. Now, I'm going to press a button, and I'm going to wait for a second. Oh, there we go. Right, so what you're going to look at is the view that a surgeon has when they're operating on a lung. Okay, and if you look at the scale here, this tells you, oops, that's it. They've found the cancer. Now, you didn't get very long to look at it, but I assure you that you would not be able to spot the tumor in the video. And the surgeon who did that operation said, there is no way I would have found that tumor without using this technology. There's just no way. I looked, we saw the signal, we operated, we looked. Before operating, we looked and looked, decided to trust the instrument, and it was right. We would not have found that tumor, which means now that surgery can be curative in even more conditions, and they don't need to cut if there isn't something there to cut out. We invested at the entry price of 4.7p. There are now investments coming at 99p, which values the company around 40 million. We believe that this company will be bought by one of the robotics companies because it is the only technology that enables surgeons to know where the cancer is. And this is like, imagine cars didn't have headlights and suddenly someone invents the headlight, and you could either buy a car without headlights, can only drive by day, or one that drives at night as well. Everyone's going to buy the one that has the headlights. And that's what we think this is going to be. We think it's going to be 20-fold up from where we are now, roughly. Again, you won't be able to get into this, but that's the kind of opportunity that we like to back. PolyCAT's an interesting one. Not many of our companies have particularly benefited from the interaction with COVID. PolyCAT was set up, someone discovered a way of putting catalytic particles on everyday materials. And one of the things they were looking at was removing the gas that tells all your pears to go rotten all at the same time. It's called ethylene. Many fruits are affected by it. And they were developing a filter for that. And they knew, but one of the interesting things was they knew that nanoparticles of silver or copper could be very antimicrobial. Then COVID happened, and then we discovered that our material was significantly more antiviral than any other material that had been tested to date. And so we've had a number of things. SteriCat, we have companies asking us to coat surgical equipment or other healthcare equipment with our coating. AirCat, we now know that COVID is spread by ventilation systems. That's not good, is it? Anyway, it's spread by ventilation systems. And we've now got a filter. Because it's so virucidal, we can put the filter in without having to change. Because you could put a HEPA filter, like you've probably heard, vacuum cleaners with HEPA filters, but they would require a massive fan to be put to push the air through. We can use a filter that's much more open and just rely on the virucidal properties. And we're not going to do that, but there are some very large multinational companies who would like to have that in their products. And SpillCat, sadly, is something that we're being urged by the MOD to get a hurry on with. SpillCat will destroy some of the biological and chemical weapons that are out there, and you can understand that there is interest in getting that done quickly. If SpillCat behaves as the first tests have shown, then cleaning up Salisbury wouldn't have cost more than £200 million. Yeah, that little bottle, £200 million, that's right. It would have cost an awful lot less because we would have been able to spread the stuff around and it would have destroyed the Novichok. And this company is doing very well. Once we get a deal with one of the big guys and start rolling out the machines, we'll do very nicely. So this is this will give you an explanation of what the portfolio is like. This happens to be mine, but it makes no difference. I put my money in. I'll keep putting my money in because I like A, getting money back from the tax man, and B, making nice profits along the way. So the first company we invested in for this portfolio was Expend, which manages expenses for companies. Molecular Warehouse, very exciting. I don't think that company is going to survive long term, unfortunately. Wonderful science, but the market didn't quite work. Animal Dynamics makes drones for transporting heavy loads of special drones based on how animals move. And you see Expend made a nice jump in value as I went along. Then Ducentis, which was right from the start, someone has identified a way of using a molecule produced by viruses to help control the immune system. Very exciting. Bioarchitect, cancer treatment, Expend went up again because people realized how good it was. We got them started. They wouldn't have started if we hadn't put in the first money. And then people joined after we had, and people could see it was good. Carillium, dealing with gut problems. Oxford Nanoimaging has the highest resolution microscopes in the world. They can see far beyond the wavelength of light. Really amazing stuff. And and then the value went up, and over time things increased. We invested in Covatic, which has developed a system which enables advertisers to send ads to your phone which are targeted without having any idea of any of your private data. So you do not share any of your data, but yet the advertisers are willing to pay for all the things that you get on your phone, which are free, in order to be able to send targeted adverts. And it's absolutely, you don't have to deal with cookies. You don't have to do it. Covatic's doing that, and they are going to do very well. And so, 1 minute left. Here we go. So we're in 2017. That's when the initial money stopped investing, and that's what my portfolio looks like at the moment. So roughly worth 4.5 times the money I put in. And I think it's going to go up from there. And I'd like to invite you to come and visit us at our stand and have a chat about whether you want to get in at SEIS Or if you have money that's burning a hole in your pocket and you really would like to invest it in this tax year, we do still have the opportunity to invest in 5 companies from our existing portfolio, including Lightpoint, in this tax year. So anyway, thank you very much.